down at one point of the US stock market after celebrating Trump in office. I think very few people would consider that this might happen, and everybody was talking back then about American exceptionalism and how all the money is flowing to the US. Now we are seeing this completely in reverse. So without further ado, let's start addressing topics one by one. First and foremost, is there any big picture? Is there any plan? Because many observers, the actions of Mr. Trump and the White House, his cabinet of advisors seem a bit chaotic and a bit reckless. So the question which I have to my panelists, can you discern some logic behind, or is it just a bunch of very chaotic moves, or is this called mayhem provoked on purpose? What do you guys think? Anybody?
Maybe we can start.
Yes, please.
I think there is some plan behind it, but it's also very chaotic in terms of execution.
Okay.
So I don't think there's like the master plan, everything is going well, but I think they have some ideas. I heard different opinions, but one thing that those guys share is like part of the administration. So one of the things is making the United States independent from mostly from China, but also from other countries. And I think this is strategically important also because they anticipate the conflict with China. But in the future, it can also be military conflict. Now it's only a trade conflict, but what they were explaining is that during the COVID crisis, it became more and more obvious that supply chains are very much dependent on China. And if China decides to just stop some critical supplies, they will be very exposed. So after this time, they are trying to in-source or bring back home manufacturing, and their labeling is jobs for Americans and so on. And maybe this is part of the reason. I think the more important strategic reason is making them independent from other countries in case there's conflict, military conflict or war. So I think this is one thing that's very important on their agenda. And another thing is, of course, finding a solution for the debt, because it's everywhere agrees it's an unsustainable level. It's 120 percent of GDP. I'm not sure at the moment, but it's a big number. So this is a second point on their agenda that I think they're trying to address. And then, of course, there are other things like reducing the debt and so on. But I think this, like the military reason, the strategic reason is the most important.
So to the bottom of that, your point of view is that this is the China-US relationship, and basically the idea of Trump is to find a mechanism that will bring back critical manufacturing in the US, because the share of manufacturing, and especially manufacturing of critical, let's say, resources, has moved elsewhere. So Trump is trying to find a way to bring back production because of mostly political and military reasons, not so much of economic reasons.
Exactly. I think this is the most important.
But then a provocative question would be, if it's only a China-US issue, why is he going after so many other countries and so many allies, and why is he upsetting the existing order and so many people that are friendly towards the US? Why isn't that confined to the relationship with China? Of course, we see that he has a special, or his administration has a special attitude towards China. This has become more clear recently, but nonetheless, he came on Liberation Day with so many tariffs, and even imposed tariffs on some islands with penguins, nobody living there. So the question, why is he doing it in such a way? Is it only China, US, or is there something else?
I'm not sure. It's a little bit strange. When they rolled back the tariffs of the 90-day extension, they left only for China. So this was one information that it's that the more important is to target it against China. But I'm not sure why he started with such a broad base tariff like against everybody. So some people are explaining like he wants to bring it to the table for negotiations, or art of the deal, and so on. I'm not sure if it was part of the plan, or he thought he had more leverage than he actually did, or he wants to unite everybody against China, or initially using it as a tool. I'm really not sure.
I agree, which I'm surprised that I do that.
We do.
Yeah. No, the weird thing is that I agree with many of the points made. I mean, I do believe that there is some plan there. Right? I'm not sure if it's Trump's plan though. It seems to me more like the people around Trump use him kind of as a tool. I mean, but Trump has instincts, and those instincts definitely go against China. You've seen that it's often being forgotten, right? There was a first Trump term. The older amongst us may remember that, right? He's not the first president. And you could see that there as well, right? So that there is a hostility towards China, and some of it's probably founded, to be honest, right? So there is good reasons there. From the strategic point as well as from the economic point. So China is playing an unfair game in many respects. In a way, the Europeans should also get their balls together at some point and do something there. Maybe not what Trump does, because I don't think it will work, but something to address the issue, to put it like that. But when it specifically comes to Trump, I think he's an unreliable player. I mean, you see him there in the rose garden of the White House with this tablet, right? Like Moses, right? Reading the laws, and he has this narcissistic. I'm not a psychologist, obviously, but he seems to me as having these narcissistic tendencies, and he just likes lashing out. He just, 36% tariff against Switzerland. Switzerland, the most friendly and open economy in the world, right? That they do nothing to artificially manipulate trade or anything. That's ridiculous. Right? It just doesn't make any sense. So either that's a complete miscalculation, which probably it is, because Switzerland just makes watches and the Americans like watches, so they have a trade deficit with Switzerland. And they just took that famously and cut it by half.
The formula,
the weird formula. Or he just likes going there and slashing it to the people and feeling powerful and mighty. And probably both is true. So both is a driver, I guess, on this. So you have to deal with an agenda that is not completely set for. I mean, you have this Mar-a-Lago accord that's being discussed quite a lot. And if you read the papers, there is at least some thinking there. I think it's horrible thinking, but there is thinking. So they address issues, right? And they're real world issues. But you also have Trump. And Trump is just Trump. He's a showman. I mean, and you see that in non-economic discussions, when he berates Zelensky and just says, well, there's fantastic TV tonight, right? So he just likes this. Right? He just likes to go out in front and has his moment. And that's, of course, a bit weird. If you go down, and maybe that's also addressing your issue, why does he so many things that don't work according to that? He's last lashing out, and you can explain that. Yeah, okay, China could sell something to Great Britain, and they could re-export it and relabel it, and so there is some logic there. It can also be explained, right? But then again, why 10% to the UK and 36% to Switzerland doesn't make any sense, right? So I think this is more narcissistic tendency in Trump. Yeah, that's my point.
Okay. So just before we continue, I think I want to take this discussion is in the end, unlike each and every one of you to have a takeaway what to do with your portfolios, how to address the current situation. So we're going to discuss whether there is some logic behind, or there is no logic behind, and what ensues. If there is logic, if there is no logic, but in the end, I think each and every one of you has to decide when you guys go back home. This might portfolio fine, but because this is at least how I understand everybody here has been affected by the turmoil and the volatility on the market. So I want to purposefully lead the discussion towards this end. So,
may I just
yes, please.
To be honest, probably you're completely right about Trump, but in the end he also cares about his legacy as a president a lot, which is also strange in a sense that he takes those risks, right? The machine is working, everybody's happy, the markets are moving, business as usual. He has the Congress, he has everybody supporting him, the nation. Why he's doing it? And I think that what George said is right. It's part of the big picture, and in order for us to understand why this is happening, we need to be more aware of the situation the US is currently in as a whole, and also historically how they arrived to this point that they need to do those things, because in the end this will allow to a certain extent to understand the motivation behind those actions. And everything that George said, I agree with. Basically, the reindustrialization and so on, everything is interconnected with the cutting the debt and the external debt, because that is not only the budget deficit and the debt to GDP ratio, is the external position of the country. In the end, it's about long-term economic growth, because the only way to close those gaps internally, domestically, to allow for a little bit of, let's say, how to put it, the inequality in the US to be rebalanced, because it's obvious for everybody that the country is not in a great shape. Like for instance, the last time I was in the US was 2020 in California, the richest place in the world. And you see like, I don't know, like the ghettos that we are seeing on the TV, just next to the Meta or Apple headquarters.
Yeah.
So this is not sustainable, and I think that it's a very long conversation. We have to examine like 70, 80 years of economic and monetary history to discuss this, but I think that this is there. At least the people around him, they are not some stupid guys that don't have any experience or so on. And nonetheless, all of them are former Democrats, including Trump, and so on and so forth. So if you, for instance, compare what he's saying with what Obama was saying 15 years ago, a lot of resemblance. Just the political talking has shifted in a very bad direction, in my opinion. So now he's like an extremist to what was considered normal. But to come back to what I wanted to say, it's about economic growth in the long run. I don't know about any reform. I'm not discussing how it's done and so on and so forth. That is done in history, a structural reform without a short-term pain. I'm not aware of. Maybe, okay, now in Argentina, but the situation there was so bad that, the starting point is so low that you can improve a lot by just, doing something right. So they are in a very difficult situation because of the internal and external indebtedness, because of the overvalued dollar. The overvalued dollar is the reason for the industrialization and shifting towards financial intermediation and recycling international dollars, basically the dollars that were loaned to them by foreigners, causing this deficit. They need to recycle almost free. And I also like my portfolio to be like 20-30% per year, easily without doing anything. But we are a little bit spoiled, and I think we have to wait a little bit to see. It's a messy situation. I do not agree with everything they do, for sure, or how it's done. But let's not forget, we are not in their shoes. We don't know basically how pressed they are by time because of the now a lot of debt is maturing very soon. They don't have a lot of time until the midterm elections and so on and so forth. So they're in a little bit of rush, and this is his style. He's a little bit crazy. He's a little bit, confusing for everybody. But he deserved his spot there. I'm not saying he's good or bad. Only the time will show. And I think it's a little bit early, at least for me to judge.
Okay, but the important thing is, and I'm sorry to interject, the important thing is that we tend to converge that there seem to be some agenda, there seem to be some plan. Now, part of the plan, if you were some analysts, part of the plan is not to basically make public what the plan really is, because this is how he wants to achieve and his administration wants to achieve the ends to the plan. But there seems to be some plan. And we are here to find out what the plan is and what the plan has to, the effect of the plan might have on US assets, because at the end of the day, pretty much everybody here, I'm sure, is overweight US assets simply because US assets are so easy to invest. Well, fine, fair enough. But by virtue of US stocks, pretty much in most portfolios or in most ETFs being 60% and up, a lot of people probably are overweight US assets. So one of the important questions is what to expect from the financial markets, what to expect with regards to the US dollars. It has depreciated a lot. Is that the coincidence or is that the part of the agenda? And just trying to summarize what you all have said, one of the issues is that US is not producing probably strategic stuff, military stuff, or stuff that is used at the end for military
It's
stuff.
not only that.
It's not only that. He promised a lot of things. He promised jobs, he promised tax cuts at the same time, which is very incompatible if you think about it. On one hand, he wants to bring back production to the US, but with a strong dollar, that's difficult. On the other hand, we want to also reduce taxes. And then the question about tariffs playing a short-term role comes into play. But before we move to that, obviously there is some agenda. Obviously, part of the agenda is to bring production back to the US. But the US dollar is very strong and has been very strong. And that leads to the next question, which is people have been talking about different dilemma. And what is different dilemma with regards to reserve currencies and what happens to reserve currencies usually and why it happens, and maybe some of you guys want to discuss a little bit about that, because I think the bottom of it is also if you want to produce in the US and you want to export after that, and your currency is very strong, or the other currencies are artificially kept depreciated against your currency, then you have to do something about it.
This is the case with China.
And this is the case with China, but not only. If you have reserve currency, everybody wants your currency.
Yes.
And you have to supply this currency. And it's in demand.
You have to have the currency. That's the idea of the reserve currency being forced. Or as who said it? Which one? It's our dollar, but no problem. Who was that?
I'm not sure.
Some previous finance minister.
So coming back to why is he imposing tariffs on pretty much everybody else? So there are categories of countries, but pretty much 10% across the board is the universal tariff that he's imposing on everyone. Now, if you have the reserve currency, everybody wants your currency, and everybody is incentivized to export to you and keep your currency depreciated towards the US dollar so that you can export goods and bring back US dollars and then reinvest US dollars into financial assets. And this is something that has been going on for quite some time. And for the plan to work, obviously, to bring production and this production to be competitive, obviously, one part of the agenda is to depreciate your currency. So I think this is one thing which is going on. That's probably why US dollar has started to depreciate. And probably this trend will persist for some time. Is my thinking. I don't know if you guys agree to that or not. But
Well, I don't know if all of us do, but I do. I mean, it's happening right now. You can see the short term. You have to be careful with projecting trends, but that's the idea. The interesting thing that's also happening, and that's part of the dilemma, by the way, and probably you guys can explain it better because you brought it in the discussion. It's not just as the dollar depreciating, but also interestingly enough, and that didn't happen in the previous crisis, right? The bonds have to be sold at higher yields, which is very interesting. So they don't work any longer as a safe haven. The US bonds, of course, we talk about the US bonds. So the yields rise, which means the value of the current bonds fall because there's always this reverse relationship, right? So, and that is very weird, and I would be worried if I was Trump, because that means that the dollar is no longer a safe haven, right? The money goes elsewhere, everybody flees US assets. And that, of course, if the trend continues, and it has to continue if Trump wants to do his thing, then we as investors, in my analysis, are very, as I made, and I put my money where my mouth is, are faced with an interesting situation, and that is that the US financial markets will become less interesting in a way. Yeah? So they want to probably invest elsewhere because you make this point, and you put the point that we have these super high multiples in US assets, especially in stocks, and they're only justified because, and that's your point, I think, because the money that is being generated by selling goods is flowing back, and it's fucking dollars. So where does it have to go? Into the US markets, propping up these markets, artificially driving down the interest rates on bonds and driving up the multiples on US stocks, and they are absurd by international standards. They're completely absurd. They're bonkers. Right? I mean, Tesla is maybe 108 times its earnings.
It's with the
average is completely bonkers. It's completely bonkers. And that almost inevitably, I think, has to fall, which means that going forward for the foreseeable time, if he persists with his policy, which probably won't beyond 2016, 26, sorry, I believe, but then much damage will be done already, that would mean that these assets become less interesting, especially if the dollar is depreciating, because in euro, in which we have to pay our bills, they will become even with the multiple less interesting, right? So and that would mean in a way, sell the rip, right, for us. So we would have to sell once we see that it's getting a bit better, we would have to sell it and reallocate assets.
Let me just say that this is a possibility.
Yeah, of course, I think we agree on that beforehand. So this is a very important thing. Everything said here, and I think we agree on the whole talk about everything here is just a scenario, right? So nobody can see the future, lots of things can happen, we have to weigh this, nobody will tell you this is the one way that will happen. This is just an idea of what can happen, right? And you have to put probabilities on that and weigh this a bit, and we probably disagree on the certain case, but that, I mean, we all agree that many things
I think that on the big picture we pretty much agree, at least also within our discussion. What you just mentioned is definitely a possibility, but I would have put a very high chance to be honest. Probability.
That's the thing. One thing is more certain. Is that the administration wants a weaker US dollar, but they don't want to lose the status of this currency.
And at least they don't want to, let's say, to lose it in a abrupt manner. They don't want to lose it with a big bang, everything, huge meltdowns, and so on. So I imagine that the idea would be like a gradual thing, or at least something new form of interaction, international interaction, also with regards to trade, but also financial flows. The dumping of US treasuries now, as far as I read and understood, is mostly due to some financial market dynamics, such as margin calls and certain trade strategies, and not that people are generally very scared and they will like drop out of the dollar anyways. Sorry?
The basis trade.
Yes. Of course, it might get worse. It might get better. We don't know. To me, why I don't put very high probability on this is, let's face it, the best businesses are in the US by a margin. Most of those businesses are very internationally oriented ones. You won't start tomorrow to use Google or Amazon or whatever. There might be hiccups, there might be some problems with margins or temporary obstructions and so on and so forth. But the best businesses are in China and in the US. And this is it.
Yeah, but
In terms of on the stock market.
yeah,
So those firms with very highly likelihood they will continue. I mean, can you put money that let's say in 10 years Amazon won't be existing? I won't do that. Okay.
Yeah,
And stuff like that. So they might not trade like in all those very rich multiples.
Yes,
at least for some time. For some time. Okay. But let's face it. This is a good buying opportunity.
yeah, but for some time, here's the thing. Yes, the best businesses are in China, but China doesn't have this gravitational pull when it comes to money. The yuan is not a reserve currency, will never be unless they let go of their capital control.
You're completely right.
Yeah.
But maybe 10 or 20 years when they develop their internal stock market, where the stock ownership is several
Yeah,
percent, maybe between 5 and
but
7%.
These stocks have not, the last 25 years, China has been a tremendous success story. Fantastic.
Of course.
But the stock market has not outperformed the American market. In fact, it's a good return, but not a great return. So there were many stock markets that outperformed China, where the economy performed
But you
much less.
you forget something very important. Chinese have 39% of the global middle class. And those people, they will get richer with the time passing by. And because of cultural and other historical developments, the local population doesn't, also because of restrictions and some other stuff and on the development of the international market, they don't invest in the local stock market.
Yeah.
Eventually, this will happen. It might happen in 10 years, it might happen in 15, in 20 years, I don't know. Eventually this will happen. But imagine, currently it's around, let's say, 5 to 7%. If it becomes double, if it becomes 10%. 10% in the US is around 60.
Yeah,
You know, they have so much room for growth of their financial markets and so on, that I wouldn't discard this as an opportunity to get inflows, because by the end of the day, the stock price is about, people. Yeah, supply and demand.
Yes. So we are now trying to decide whether US or China or elsewhere it's a great opportunity to invest in the stock market and why it hasn't performed. We get to that. Just coming back to our discussion about why this administration is doing what they're doing. One of the questions was, okay, is there a plan? Obviously there's some logic behind. They want to bring manufacturing back to the US, maybe for military reasons, maybe because that's what Trump promised to the voters, that there will be jobs, because his supporters are mostly from these areas which have been affected by deindustrialization of the US. So he's doing, or the administration is doing something which is expected in a sense, trying to show to the voters we want to bring the industry back, we want to make US great again. And how are we going to do it? We're going to depreciate the dollar, we're going to create incentives for companies to invest in the US, those companies that have moved elsewhere. And how are we going to finance that in the short term? We're going to impose tariffs so that we can afford to reduce taxes, corporate tax. We promise to reduce corporate tax, but money has to come from some place. And money is going to come from tariffs. So the grand scheme of things is, let's depreciate US dollars in a very coordinated manner, but in a manner that does not hurt the financial markets. That's what I think they were thinking, because the moment when the financial market started to go into the abyss, he backed up.
Especially the bond market.
Especially the bond market. So, that was the first part of the the story, so to say. And he's a very transactional type of person. Please.
There's something more. There are also this, let's say, agenda. There are some other components that are also important. One is the reduction of the state budget deficit, whatever you call it, which is those things they try to do. If they want to succeed with this, how, when, time will show, I don't know, but this is one of the things that basically, because if you cut taxes, you don't have a lot of money to spend, the government has to shrink, so this will cause a recession for sure. So this is one thing, and the other thing is, unless, you squeeze the government to give money to the people and incentives to the companies to relocate, you could also red tape so they can do business easier. And if all those components work together, I don't know, this is some really magician style trick that has to happen so everything works in concert basically perfectly. But this is the idea, to attract the businesses. Of course, some of them will be with the arm bent behind the back because of the tariffs and everything. To give them incentives, tax incentives and also regulations. At the same time, to use the money from the tariffs to cut the taxes, and also the budget deficit, which will also allow to free some funds. This is at least my understanding of the bigger picture about the agenda. Whether this is going to happen, how?
It is not the plan, it's wishful thinking. I mean, that's what he wants, but you can't have your cake and eat it. I mean, this just can't work together. So you want to have tariffs that generate money, but then the discourages trade. So you want to lower the deficit, but you also want to lower the taxes. And then again, the income from the tariffs will depreciate because. And you want to create new jobs with record low unemployment, so there's 3.6%. Who wants to do these jobs actually? And then you want to get the migrants out. So none of this works together. This is like, again, this is the American way of saying it, having your cake and eat it. It just doesn't work. Yeah? It's wishing many things, like from Santa Claus, and hoping he delivers.
Maybe.
And if I may share a story, because I have some insights, especially on this, will businesses return to the US? Because I'm just working for a company that does intralogistics management for the automotive industry, and one of their largest customers is, I hope I'm not breaking my NDA, but you can read this on their LinkedIn page. One of the largest customers is largest European car manufacturer, and another one of the customers is one of the two largest American manufacturers. I don't know actually what the largest is in the US. One of the two largest, right? Not the single one, not the third one. So they constantly not only have to make their own decisions how to allocate their resources, where to invest, because there's a European arm, there's an American arm, but they also sit right in the decision-making process of the Europeans and of the Americans, because they equip the factories. Right? So literally, if that manufacturer in the US wants to expand the factory, they have to ask them, hey, what's the timetable and can you deliver, and so on. And they know how the factory look like, because they literally have a SaaS software that controls the AGVs, basically robots in the software. Not the robots that work together stuff, but the robots that transport stuff. That's what they do. So they know exactly what happens. Right? They are part of, and they know it before anybody else knows. And then again, I can't share any details, I'm under NDA. What I can say is, because nobody hates anything as much as uncertainty. Yeah? You don't know.
This is very short.
Yeah. No, it's not very short. No, let me elaborate. An investment decision in this industry has implications over the last, just to come up to build a factory, takes between 7 and 10 years. So now this tariff will probably, if it actually comes, because you don't know, what's the current tariff on Chinese goods? Does anybody know? No, nobody knows, right? How often is it going to change? Nobody knows, right? So this tariff, if it even comes, will be done probably by 2016 because it's unsustainable. So do I make an investment decision now that I will have to justify in 7 years from now in my shareholders? No, I won't. And we have to, and this is true, this is not a theory, we have seen this in Germany, the fatherland, because they have had an investment-driven recession for the last 3 years. Why? Political uncertainty of a much lesser scale. But nobody wants to invest because nobody will they phase out, the internal combustion engine, yes, no. Is there a new law on how to isolate buildings? Yes, no. Do I construct something? No, I don't, right? So nobody did anything for the last 3 years. Recession, 3 years for the fatherland. And then again, this was much smaller than the uncertainty we see here. And I can tell you, nobody does anything at the moment. Nobody will do anything. And yeah, I don't see how this can be sustainable going forward unless certainty returns again. And does really anybody believe that Trump will be certain? He's so jumpy. He's so jumpy. Yeah? Does really anybody believe that anything he says today will be in place even on the afternoon? You can't run an economy like that. It just doesn't work. I don't see how it's going to work.
Yeah, and as soon as uncertainty gets resolved, going to be going for business and going for market.
So this is, we're moving to, I think the agenda has been set for the questions that we're going to discuss have been set, and the first couple of them were, as I have said, is this just chaotic movement or actions? Is there a plan? There seems to be a plan. I think it's a bad plan, because now what you're sharing, I do completely agree with you. As a business person, no capex decision will ever be taken under those circumstances. You know, if there is a lot of jumpiness, it's a very good word that you use, if things get changed over a couple of days, nobody with resources is going to commit capital. That's very clear. If inflation persists, that's going to probably lead to inflation. And most likely this is going to lead to job losses. And now we're stepping into the next question. And this is what are the, let's say, the mechanisms or the automatic guardrails which are going to contain the situation? Because the US market is a very liberal market. You see, you pull one thing, you want to depreciate the dollar so that you can create incentives for production companies to come, but it takes a while for production companies to take a decision. They need some certainty, the certainty is not there. But what happens like that is the financial market reacts immediately, right? So now the question is, what is going to, and is already kind of acting against or somehow preventing the administration from the stupidity of people, of course, is enormous, but there are such mechanisms that very likely will not let Trump and his administration to continue to persist. And these are the financial markets, in my opinion. What will happen to the stock market? We have seen what has happened to the stock market, and it's very painful because these are rich people. You know, himself probably he's very invested in the stock market, and that's a very dear thing to him. And he's seen that his wealth is going down, and a lot of the Republicans behind his Ted Bros and all these guys, they, you know, a lot of money is disappearing very quickly. So the question is, are they going to persist through that? One thing would be the stock market. Another thing would be the bond market, which is even scarier. If nobody wants to invest in the US, imagine that this big country experiencing, not Greece really, but what has happened to Italy, another large economy. If people lose trust in US government bonds, then that's a big thing. So that's another thing. And when the bond market started to move in the opposite direction, you know, next day Trump came and said, you know, postpone it for 90 days.
So the financial markets are really acting against, strange ideas or ideas which are not very well thought about. And then the third thing is voters, I guess, because people are starting to feel the pain, and will probably feel more, and this dissatisfaction probably is going to grow. I just want to hear you what you think about that. Do you think this madness? Because in my eyes, this is the way. I mean, there is a plan, but the way it's being executed is really very chaotic. Maybe on purpose, it's designed to be chaotic, but it's not producing the intended consequence, even for those that have probably designed it to be so chaotic.
I think it will, especially after the last days when we worked back and I can give it a more optimistic view is something that I think makes sense is they wanted to front load a lot of the damage because they're still like in the window, they can blame everything from the previous administration, or at least
Rightfully so.
for many things, yeah. But when we go to later in this year, and especially next year, we'll probably start to care more about what voters think, and they probably want to make people happy because of the midterm elections in 2026. So I think it makes sense to bring the worst part of it early on, and then move to the other items like reducing taxes or the other things that will be taken up more positively by the market. So maybe this is coming, but I don't say like 100% this will reverse because Trump is very hard to predict. So it's possible that he continues to flip-flop around these tariffs for a few more months, and then of course markets won't like it. So it could be a lot of range, but it could also be like optimistic if later in the year they start to care more about this. They clearly care about the bond market, but Kirk and Rick is also in the Wall Street Journal and elsewhere, especially Scott Bessent looks like he knows what he's doing, and the story was that he convinced Trump that he should postpone the tariff for 90 days, and the market reacted very well to this. So I think there are some people that know what's going on, maybe not Trump necessarily, but he listens to them. So we'll see how it goes. But this is the optimistic view. Maybe the pessimistic view also is that a lot of people are talking about the end of American exceptionalism, and rightfully so, because a lot of money are going out of the US, and Trump is unpredictable also for other countries. So some people are saying the damage is done, and now even if they I think it's better, right? Now even if they decide on flat 10% or whatever, and if it can come down, some trust is broken and some things maybe won't return. I'm not sure. It's hard to judge because it's more psychology than business.
So then I'm going to step, because I need to leave in a little bit. I'm going to step into the last questions, which I think will be the most relevant questions for this audience. This is portfolio construction, and how do you guys, or have you been experiencing what is happening? How is your portfolios holding up? We discussed here certain principles. I remember I wasn't here the last time, but maybe a couple of months ago we were here. This the whole story with Trump was completely not playing out. Everybody was very positive. Everybody was thinking only about stocks. How is the situation now? What do you think about what is happening? Would you have done something differently? Are you happy? Are you buying? What are you buying? And here, I just want to throw something as a, what is it that I word in English? Just as a helper. Have you seen the value of gold and how that, and why do you think this is happening? And are you aware of another period in U.S. financial markets when gold went up so much?
so quickly, and another period when this 60-40 portfolio didn't work out so well, but having some gold worked very well, and maybe having some real estate investment trust worked so well. So, you know where I'm going with that? No.
Well, I just chip in.
Yes.
Many questions were written to me. I forgot half of it, sorry.
It's all about portfolio,
yes,
smart portfolio construction.
Yes, I think the smart portfolio construction is and has been and will be always. Nothing changes here, I believe, because there's nothing new under the sun. And that was, who said that? Epicure, right?
Mm-hmm.
And that was 2,500 years ago. You have to be agnostic because you don't know the future. I mean, we agree that we think in scenarios, we weigh them differently, but we don't know what's happening. We don't know, I don't know it, and I don't even want to know. So at the end of the day, I think what's the prudent thing to do, it served really well in this specific crisis, I think, is just be super agnostic when it comes to assets. So you mentioned real estate as a real estate trust, or maybe also as a house, and everybody here in Bulgaria owns their own house. I just bought one. So fantastic. So that's separate. But you mentioned gold. I think gold belongs into every portfolio. Huh? I mean, it's a fantastic counterweight. It's insurance.
Inside is very easy now.
Yeah.
If I ask you a couple
No, I always have gold. I always have gold. I mean, you have to have gold, right? Yes.
If you don't have it now, it's a good time to buy it.
No. Probably not. But you need to have it. Right? You should have 5% of your portfolio in gold, and you want to probably have some physical. We had this in Germany, right? At some point, there was a really good time in '49 where it's good to have gold. Not in '45, by the way. Everybody thinks it's good to have gold in the crisis. It's a terrible idea to have gold in the crisis, and other people know it because they have guns and they come and take it. It's really good to have gold after the crisis, when the rule of law sets in again. Just thank you. You're welcome.
So you have access to the point where
You have to have it clear, and you have to remember where it is, and nobody should know where it is, right? That's my impression. That's the German experience. Believe me, it works.
Don't measure that.
No. Don't do the thing like the movies. Don't do that. So you have that, and of course you have your 60-40, maybe not 60-40, but something in that of bonds and stocks, and maybe have a bit of crypto. I have a bit of crypto. Not that conservative. And that's all fantastic, but at the end of the day, even in the stocks, I think you have to be super agnostic. All the currencies, all the sectors, all the countries, just mix and match it in a way that is half representative, that represents the world economy, because the world economy will not die. It will not go bankrupt. Whether or not America goes down or up, or China goes up or down relatively, you don't have to care if you own the world economy, world Inc. Right? So that's probably a prudent thing to do. At least if you invest long term and not a trader. If you're a trader, of course, this is a fantastic time for you because you can do swing trades and it's fantastic. Trump, by the way, to mention the other question, I don't think that Trump is poor or loses money. I mean, he's the biggest market manipulator, right? And there's lots of insider trading going on. And he has his own coin, and you can buy the coin 5 million euros, no dollars, and you can have dinner with him, and then he gets you the insider trading information, which is corruption, by the way. But anyway,
let's do some money.
Yeah, can we all agree to put together 5 million? Yes, let's go to Mar-a-Lago. Would be a fantastic idea. So, my point, sorry, I made too many words. I think the good plan going forward, and it has really worked really well, is to have this agnostic portfolio, and then to buy every month the same sum, maybe adjusted to inflation. Every month, use the cost average effect. Don't look at the thing unless you need it, and think in decades of my portfolio started a bit late in 2016, so it's only 9 years now. I should have done this earlier, but I was so stupid. But think about this in decades, and then let it just grow. And that's it. Look once a year, maybe do some rebalancing, the 60-40 rule, maybe you want to rebalance a bit. And then let it go. And that's it. And you go well through every class. If you really want to have this crisis opportunity and have some 20% in cash on liquid T-bills or something like that, sell them and buy some stocks when they really dip down. Not the 2%, but like the 40%. and you should be fine. And that has been working, it works and it will be working for as long as capitalism exists.
Yes.
I believe.
I think yes. So let's try to wrap it up with some of the conclusions and open for questions. I fully agree with what you're saying. One thing that we haven't discussed is that for different people there are different weights, and different weights of stocks and different weights of gold, and depending on how old you are, how young you are, and whether you are still working or not working, diversification in terms of weights can be fine-tuned. So if you are very young, probably I'll use this as an opportunity to step into the market aggressively, by the way. But if I'm close to retirement, I'll be thinking twice about committing a lot. Right now, to the US stock market, I'll be thinking more about a more balanced portfolio of, let's say, stock bonds, alternatives, big gold, real estate investment trusts, or even liquid investments such as, private bonds and whatnot. But so basically, there seems to be some logic behind what the administration is doing. It's being done in a very chaotic way, maybe on purpose, maybe not. We don't know about that. It doesn't seem to be in the short run getting the results which they're hoping about. It's a very uncertain world, and if the world is uncertain, as it always has been, it pays off to diversify your portfolio and to adjust it according to your particular situation. Your particular situation depends, how old you are, whether you're working, whether you're healthy, not healthy, so on and so forth. And this is how I want to conclude and open up for questions. Please.
It would be interesting to know, like, each one of you, what are you long, what are you short? I mean, this is not financial advice, I really know, but it would be interesting to know how you see the market and where you put your money, where's your mouth, right? And I would like to ask that very short for the moderator and for participants, like, for each one of you, just for, I don't know, 10 seconds, say, I buy this, I sell that. That's all. Top 3, top 5, that would be great. Thank you so much.
I'm not going to give any names because I'm not investing in particular stocks.
No, it could be gold, crypto, Bitcoin, shitcoins, like.
Right.
Maybe market prices.
Yeah, so first, what I have shared before, that still applies. I think in the past we have discussed that I keep a certain amount of, let's say, assets which are not very risky, that covers my expenses for 7 years in my case. Why is it 7 years? Well, because I think 7 years is a long period of time. I have looked at how the markets, what is the rolling return over a 7-year period of time. Probability-wise, there are very few periods over 7 years when the market has not been in positive territory. But that's my take. So this is invested in, let's say, short-term corporate bonds, and intermediate corporate bonds and some cash. And on top of that, I have another layer which has performed quite well, which is consumer staples. Consumer staples have not been affected at all, or very, very little by the meltdown recently. And now recently I started to increase my exposure to, high dividend stocks, world high dividend stocks, because I find the yield that they are offering around 3.6, 3.7% quite attractive. There is an ETF which is Vanguard ETF, where US is probably 45%, and the rest is other regions. So for me that works. And then I do have real estate, which is income producing.
Is it distributed or?
Accumulating still, because I'm not drawing it down right now. Even if I were, still tax advantage in Bulgaria is better to be accumulating, because you forgo 1% dividend tax. And the thing which I'm thinking to add now is healthcare, because healthcare didn't perform so well in the past couple of years. but it seems that it's not going to be affected by potential tariffs so much. So this is something that I'm keeping an eye. I still don't have it, but maybe, you know, I would put a little bit of money there, and that's about it. You know, I still have a major chunk of my portfolio invested in the market, and by the market I mean MSCI World. I always have invested at least, I think, around 25 to 30% in one ETF, which is, I think, is extracted MSCI World, and that's about it. And yeah, the portfolio has been affected, but was I able to see it well? I think so, because there was a lot of safe assets in the portfolio. It's not nice to see losing, I'm not going to say number, the big numbers on the screen, but on the other hand, you know that you still have, you look at the other part of the portfolio, which is quite stable, and a lot of it has been in green territory right away. But that's, you know, for someone my age, and you know, if you're someone younger, this is an incredible opportunity to be a bit more overweight on, let's say, even a momentum strategy, which has performed better than, let's say, other strategies in the longer run. And by longer run, I mean 10, 15 years.
I can be very short. I did, with two exceptions, nothing to my portfolio. I just continue buying every month into the same ETFs and the same assets, not just ETFs. Same amount of money to use the cost average effect period. There's two things I have done, and both of them only to keep my monkey brain occupied from doing something stupid in the main portfolio. Right? So to have this idea of the agency. One is I do have an open-end short, and I'm not only normally, I have one open-end short in the Nasdaq. Simply, then again, to keep my mind, should it fall, and it's very much in the green territory, right? Should it fall further, I can sell it and buy more stocks. It's insurance basically, it's just insurance, nothing more. The second thing is I bought a basket of European defense stocks. European defense stocks. And that is more like a long-term project, not a short-term reaction, because there will be this decoupling. Well, a few weeks ago, basically, when the turmoil was on the horizon, because there will be a decoupling. I mean, the discussion about kill switches in American weapons and so on. There will be decoupling of the industries there. And I think with the long term, I mean, Germany, the fatherland, issued 1.1 trillion euro bonds till the year 2035, I think. Half of which is earmarked for defense. I mean, do the math, right? But except for duty, for those two things, I did nothing. There's one thing that one could do if one is a trader, because that kind of ties into what you said about the services in Google and Amazon. Will they go bankrupt tomorrow? No, they won't. But for a number of reasons, people will probably look into certain European alternatives for certain applications. So if you look at the OVH stock, for example, which is a French cloud provider, and you ask yourself why the stock looks like that, that's the reason, right? So, and if you combine the dividends, you may also think Deutsche Telekom, for example, these kind of stocks. So there's a good business case for them, but this is not investment advice. Right? So I do own Deutsche Telekom, but I bought them in 2020 when they were like 1/3 of the value right now, and they pay like an insane dividend. But I would probably still buy it today. But this is not investment advice.
I can be short as well. Okay, so going into the year, I was long US stocks, a lot of tech stocks, individual names, and I was long crypto. I sold the tech stocks with very good timing. Yeah, this was good. But I didn't sell the S&P because I thought, okay, it's S&P, it will fall maybe 10%, but not that much. It's okay, so I'll just keep it. So this was probably a mistake because it fell more than 10%, nearly 10%. Why not hedge some part in the S&P? So this I kept, and I'm still long the S&P, but I moved some exposure to Germany because of what you were explaining as well. So now I'm not US equities, but a little bit more diversified, maybe I should be much more diversified. And I listed most of the crypto at not exactly the best time, but still a good time. And I recently added back some exposure, but not very much. So I have much more cash than I did previously, but I could have done much better also.
Yeah.
I'm still long, but that's
Because I was very depressed back in 2022, I didn't buy enough back then, although I had like a written plan, what at what price and so on, which, yeah. That is exactly why the mental health is very important. I would say that investing is like 60-70% psychology and to be mentally stable and so on, and only 30-40 math and understanding financing.
Something like tennis. Tennis is 80% psychology.
We have people in the debates, it's similar. So I have one part of my portfolio that is constructed of ETFs, which are diversified, small part European, large part Asian, Chinese, big part US, and so on.
So you like adventure?
Sorry?
You like adventure?
I wouldn't say why.
China. I mean, China is adventurous.
Depends on the perception. To me, it's not that much of a threat. I might be wrong, of course, but I think that Chinese are pretty much more capitalist than us.
So one question, sorry,
I'm not too concerned about their so-called communist regime.
are you doing it on the stock exchange in the US or the stock exchange in China?
It depends on the name. Some of the stocks are not listed. It's basically Hong Kong for us. If you want to buy
So you buy
stocks
in
that
Hong
are
Kong?
not stocks that I can buy in Europe or dollars.
So you trade on the Hong Kong stock exchange in renminbi?
No. I buy them mostly in Frankfurt, in Europe.
So you're on the Frankfurt stock exchange? Okay.
Or SEC.
Yeah, but you're not trading in the, okay.
No. I received some stocks as dividends from Tencent, which are some listed on the.
For tax reasons, you shouldn't be buying anything outside of European stock exchanges unless it's not traded on European stock
Yeah, but
exchanges.
sometimes you don't have a choice.
Yeah, if you don't have a choice, it's a different story. If you have a choice, then it's always
Yes.
better. Even if the liquidity is low, you're saving on taxes.
Yeah, but this ETF portfolio, I haven't touched like for 2-3 years. Haven't been adding and so on because I thought there are better opportunities, and in the meantime I get quite a good part of cash, and I managed to sell some of my positions that were hugely overvalued, I think, beginning of this year. Not as much as I should have done, but nevertheless, although I had the idea, but sometimes you just miss it and you said, okay, it's the usual form of thing, right? It's too early, it's a little bit later, and so on and so forth. I should have sold Apple, I didn't. Tesla some part of the position because my entry price is quite good, so I have like 3-4x. I should have sold some of it just to, because it was obvious that I can buy my shares later at a cheaper price, right? These were some mistakes in
Always
hindsight.
obvious in
Yes, in hindsight, but it is what it is, and no regrets. It's a for me it's a long-term play, anyways, at least for now. And as I said, there was no opportunity cost because I had some cash. Recently I started buying during the dips. To be honest, I was also a little bit surprised by Trump's maneuver with the axe. I thought that most of the market had anticipated most of what was expected before the announcement, but I managed to average down because I started buying too early. Yes, because I started buying too early, but in the long run, those would be mostly, like 10-15% could be like a small hiccup on the curve. Yes, in the long run is, my holding period is minimum 3 to 5 years. Minimum.
What you say, minimum 50 years.
No. Minimum 3 to 5 years. For some stocks, I reevaluate my thesis periodically with updating, how the business is doing, what it's doing, and so on. I don't see. Those are great times to buy those companies.
I have one comment for you. Every time I think something is priced in, it's never priced in. Seriously.
It's a tricky situation because when you're sitting like 30-40% cash, you think you always have enough cash, which is a mistake from the past. By the way, for everybody, one thing is to understand the business, the company, to have a conviction and so on. Another thing is to have time spent in the market. These are completely different. You may have read like 20 books, you may have education, like I'm talking about myself right now, and so on. You might have the time to dig into the companies and to talk to people and then so on and so forth. It's just spending time in the market, having skin in the game and so on. It's a completely different thing because things like timing your buys, sizing them, sizing the positions, rebalancing. Should you rebalance? Should you not? You have 3-4x. Should you, let's say, at least pull out the initial investment? What should you do? Things like that. So, and to have like a disciplined approach because emotions start to kick in eventually, even for the most cold-blooded killers. And this would be my.
So, who is the bigger earner, the ETFs or the individual stocks which you manage?
It depends on the point in time. At certain times, the broadly diversified portfolios were working better, but nevertheless, one of my portfolios was very heavily weighted China during their real estate crisis and restructuring of the economy, so it was very moving. And in the same time, the other one was like 50% S&P 500 and was moving heavy. And then typically my stock portfolio is quite concentrated because, to be honest, I believe in the temporal diversification. Basically, if you have a good idea and you see this thing cheap, you should dig, and then with the time passing by, with other things going, at the price that you want to buy them, you start to buy from them, and the portfolio starts to diversify itself abroad. Because like 5-6 years ago, I had some of the stocks were like 50-60% of the, like a single name. And but you have to have the stomach to go through this, because sometimes you see deep red and so on and so forth, but you average down. It's also the cash reserves management is very, very important. This is a very big lesson that I learned early on. You have to be careful, so you can, bear the fruits later on.
What do you mean by cash management?
How much cash you have on the side, because if you see a lot of discounts in the same time, you have to make decisions, and it's a tricky situation to be honest.
And there are, if I may think on that, because I think it's a good point. It's probably the most important point. There are.
I have another meeting. Apologies. Yes. With pleasure. Thank you guys.
So for the lazy people who don't want to concern themselves with cash management, there are, like me, there are products in the market, like for example Global Portfolio One, it's an Austrian ETF. And what they do is very sexy. They do the cash management for you. So basically, for every sum you invest, they put 20% in their own cash reserve in the ETF themselves. It's of course not cash, it's typically Swiss bonds, because they always appreciate against the euro, right? And if a crisis hits, like in a crisis, I think they define -10 or -20% plus some additional factors, then automatically they reallocate this cash reserve into basically buying the dip, if you so want. So it happens automatically. It's really sexy. If you do this by hand, it's fantastic. But if you don't have the time or the stomach to do that, and that's I think what you were going at, right? You can buy these products now, and they work incredibly well. I mean, it's fantastic.
Do they outperform the stock index that they're buying?
Yes, they do. In the long term, they do, because they use the magic behind this. This is back tests are of course very difficult because you test the past, not the future. Right? We know this. But there is one thing about investment science. There's a science behind it, and that is this. As an institutional investor, you do have both. You have a cash, but you also have a risk budget. And if the risk gets too high, you have to exit the more volatile assets. But if you're not institutional, this would technically be a good time to buy, right? And so you want to invest if there's blood on the street, right?
This is our advantage, basically, to beat the money managers.
Yes.
Just the rules that they buy, and especially in downturns, they have very large drawdowns.
Yes.
And they need liquidity. Yeah. And sometimes they need to sell things they don't want to sell, or they have like another opinion, but they have to. Yeah. And the mundane, and the value at risk models, and so on and so forth. It's everything. It's like that is exactly why most of the professional money managers they don't make.
They can't be the money.
Yes, they cannot make money for you. They just collect the taxes and make money for them.
Yes. Yeah. What's the name of this product? This is the Global Portfolio One, and it's an Austrian product. It's in. I can get to the easy. Yeah, that's a lazy product, right? It's for lazy people like me.
Yeah, you're all lazy.
So it's a more lazy. I mean, the thing, just to explain this, I don't know the information. If you want to make the big money, of course you have to concentrate your investments, because you have to have this one share that does the 10.
You have more risk.
You have more risk. But this is a world portfolio. That's why it's called Global Portfolio One, and it's not overweighted in the US. So it's not an MSCI world, right? Because the weighing of the stock is not done by market cap, but by profit. Which means that the US is not as overweight, and Europe is much higher. And it's very interesting. It's more balanced, yeah. Plus we have this investment visa. So for lazy people, that's a good alternative. There are similar products, but this is the one I am happy to be invest a lot of my money in, and it works really well. That's fantastic. Yeah.
Any more questions from the audience? No. Okay. Anything else you would like to share? Like, this was a very good discussion. I learned a lot. I really enjoyed it. Thanks for putting the time. But is there anything else you want to share after this?
One thing maybe, because this is technically about the crisis in America, right? So, well, I mean, if there's a crisis, there's a crisis, so they're coming though. And yeah, so keep cool health, right? And nobody can know the future. I think we can agree on that. Even though we have different ideas about the future, but you can't know it, right? So you have to come up with your, you call it investment hypothesis, right? I call it scenario. You have to figure it.
Yeah, sure. It is what it is. There is always a danger lurking behind the corner. It's something you can know yourself. But nevertheless, sticking to the basics, DCA, owning good businesses that have sound
cost average.
yes, that have sound balance sheets, no debt, right? A lot of cash on the side, so on and so forth. They can withstand a recession, they can withstand a crisis, whatever. To be honest, if we follow mathematically the logic, the financial market logic, the S&P should drop for maybe 34% more to be fulfilled the basic requirement that basically one of the markets provides the risk-free plus premium, which is broken like I don't know, maybe for 15 years already. If this will happen, nobody knows. I don't see it, especially in this environment of instability and so on, because it will cause like huge problems in all directions. So no matter what Jerome Powell thinks and so on and so forth, they will eventually have to intervene somewhere. And it's just the rules of the game, and the game was created by them. So
yeah, how to exit that. Well, that's a long time. We start the discussion again.
you know what I read? I don't know where I read it, but that basically our generation was robbed of the opportunity to become rich in the stock market because of the basically not allowing the market to fall for 15 years already. You know, because all the previous generation, they had like statistically every 6 to 7 years there is like a huge drop. And if you enter the market, sometimes you know it's 20-25%, sometimes it's 40% on larger periods, not during the big crisis. And if you enter the market, you basically at that point you are able to accumulate at very good prices, and eventually you have some money on the side. But because of all the easy money dropping from the sky for 15.
It's easier, you know, never slow.
Yeah, but I wouldn't touch margin loans and borrowing money and you know.
You can buy calls.
It cannot last forever, for sure.
Yeah.
And whereas the other thing that I just mentioned, this is almost with certainty, but later on, this is like a very bad distribution of cards, basically for us, because at least for me, 2009, I didn't have money. Okay.
Okay.
Yeah. You know better than me.
Okay.
Yeah. So you have to wait, and the good buying opportunity never arrives. Then eventually 10 years later comes COVID, but You wait like.
COVID is once in a century. Right?
COVID was like a very minor thing, to be honest. It was. It should have been deeper.
I can top this. 2009, I had money, but I spent it on divorce. 2020, I had money, but I spent it on the second divorce.
Oh man.
So just let me know in advance.
I can provide you with the child of the next divorce. If you want.
Yeah. You just start thinking about it.
This is a bad one. Go ahead.
Okay, guys, thanks a lot for this discussion. Everybody, thanks to the participants. Thank you, guys. So now, like, I would like really to have a more strict agenda for the next meetings, for this meeting too, because like we were like long till 10, 10:30, whatever. So this meeting I would suggest we end at 9 sharp. And now I'll say we have like little discussions among us and exchange whatever we want. And for next time, we'll definitely talk on mental health. And this will be also the starting point of our other sessions, will be also on spirituality. Because as we discussed at the beginning with each one of you, like this is not like a merely financial club, like investment club. It's about like financial freedom. And financial freedom is more spiritual than only having enough capital. It's like, what do you feel in your soul, right? So what we're discussing over here is like great, like to have enough and have buying the dip, selling the high and whatever, right? But at the end, it's like what really matters is what is in your soul, right? And I think it's about time so we start delving into that part too and working on that. So again, thanks a lot to everybody that came that talked about it. Now we have like half an hour talk, and then I suggest we call it out. Yeah, thanks a lot.
Let's get some
Thank you guys.
Слушайте, Матея. А?